Here one, the market rose, the market fell. Here's how we treated our portfolio in the last week. And we are talking about the week from the 9th to the 13th of December. Friday the 15th. Hey, so let's go over what we bought, what we sold, why we did it, how the market is treating us, and what I think is going to follow the next week. As always, going to do our risk assessment at the end of the episode. So definitely stick around, like and share, and of course, subscribe to this channel if you're financially inclined. So let's get started with generally what I sold. Only one single stock I sold out of Coca-Cola. Why did I do it? Well, Coca-Cola is having here a bit of a problem. On its technicals, on a 1-year technical, if you take a look at this, it does not know where to go. It has two, if not three major problems. First of all, Ozempic, the weight loss drug. Second of all, I believe it's the assigned Trump health advisor, which is RFK and RFK Jr. That is the little Trump's vaccine skeptic RFK Jr. for health secretary. Now, I would say he's not a skeptic. He's not a vaccine skeptic. He had particular problem with a couple of vaccines, so not a vaccine skeptic per se. So I'm still betting on Coca-Cola is going to have more of loss here, and maybe I'm going to add back to it. Momentarily, I didn't have that big of a position. I believe it was 2% of the portfolio, but I'm out of it. Momentarily out of Coca-Cola. It could have a good year next year, but for the moment, we're out of Coca-Cola. On MACD signal is still on a buy, trying to trigger a sell signal here. It's not overbought on an RSI. It's actually in its mid 44s, so there could be a bunch of upside from here for Coca-Cola, but it could also just consolidate and go back down again or back up again. Take a look at what happened from 2023 to 2024. Just consolidate and then it went completely down and then had a massive jump from here to here. That is over 40%. Okay, so let's move on with what we bought. So I added to CVS Healthcare, to Intel Corporation, to Vernova. If you can remember last week, I sold a little bit of it. Now I bought it back. And one last thing, added to Powell Industries, not Jerome Powell, that would be cool. And I'm expecting from this to gain a pretty good profit right up here somewhere there. Okay, so let's go over each one of them. CVS Health. I know, CVS. Maybe it's still a bad idea, but I won't give up on CVS. Look, they have the largest pharmaceutical chain in the US. So if CVS goes under, somebody's gonna buy it, and then I'm going to have a huge payday. That's how I believe. Now, on a technical terms, CVS right here is definitely oversold on a MACD. On an RSI, it could go lower. It closed on Friday on the 29.43 on the RSI. It actually jumped back from a low of $48 a share to 49.37 cents per share. And think what you will, but if CVS comes back from here to its highs, to its higher highs, it's at $100. And right there is the sweet spot. So, ladies and gentlemen, let me hear what you think about CVS down in the comment section below. I would love to hear your thoughts. Still, it currently yields a dividend of 5.39. So just think about it. Yes, they could cut their dividend, but if they don't cut their dividend, you're actually depending on if you would buy it now. This is not financial advice. Remember, I'm not a financial advisor. But if you would buy it now, you would get more than on a 10-year US bond. I mean, so just think about it. It has huge potential upside with. Let's just see what the analysts say here. Go to forecast. Remember, you can take those forecasts and shove it up wherever you want to shove them up. But from here, they see a upside of 34% for the next year, which is, well, just above the Goldman Sachs said for the next 10 years, they're seeing a 3% return. So average 3% return. Now, next year could be extremely volatile year. Remember, we have a new president. He's announcing, not we, but the US has a new president. I would say the world has a new president. But Donald Trump is announcing huge tariffs. And if Xi Jinping, if whoever's going to be the new chancellor of Germany, if France, if all of them, if Canada is going to be hit with tariffs, it's going to influence all markets. Now, once again, CVS looking pretty good into the future, but do your own research with CVS because it's not down for no reason. It does have its reasons. Okay, let's move on to the next stock that I added is Intel. Intel still, I believe, it's one of those stocks that's going to be either bought out or saved by the state. So right here at its almost new all-time low, just take a look here. I don't think they were this. So let's go to a 5-year. Not even that. The last time it had this low, let me draw here a line, a horizontal rate. Last time CVS was down here, not CVS, Intel. The last time Intel was down here was in 2012. It's over 10 years. So if you would held Intel for 10 years, you went nowhere. But also it had its all-time highs back in the 2000s. So, well, basically in a bubble. bubble. Although we see a bubble in the chip industry, it seems that Intel isn't part of that bubble. Maybe it was in 2019, 2021-ish was in the bubble, but the bubble burst and I believe Intel is undervalued. Let's just say that. You have a chip producer, doesn't yield any dividend anymore, with a, where is not even showing PE because it has negative EPS. It has a low PE. Let's just say that. So should you buy or sell Intel at this particular moment? I'm still buying Intel. Each time it has such a huge dip, I'm still buying Intel. Okay, let's move on to the next one. Vernova. Once again, I love Vernova. Is still on a sell signal. I don't know how low this can get now. It's on the sell signal, but it's actually here. Draw here a couple of lines. It's still in this tunnel. It won't get out of its tunnel. Okay, although it's triggering, so it's on a MACD sell signal. RSI is getting lower and lower and lower. Somewhere down here, it's going to have a next pop, I believe. Now, will this last for years to come? Is this a long-term investment for GV? Remember what they do. They're actually working on grid systems. They're building, not manufacturing, but assembling windmills. They did have a bad report on the wind energy, but they're also having a pretty intense grid system operation, which is extremely good because we do need more energy. Remember, the prognosis are that in the next 10 years, we're going to not only 10 times, but 500 times our energy output. So energy need is, and also energy output has to be dealt with. But in order to have that output distribute, you need the grid system. So that is what Vernova is working on. Okay, so let's go to the last one that I added to, and that is Powell Industries. Now, this is a trade for me. As soon as it's going to pop, going to be oversold, I'm going to say my farewells from Powell because it is dimensionally overbought. Although it has here P of 20.82, this is one of those stocks that is extremely overbought. Believe you me. So what I'm trying to do here is just dollar cost average into this downturn, and maybe in the Santa Claus rally, I'm going to take my farewells from it. But definitely stick around. Remember to like and subscribe in order to get informed what I'm going to do with Powell Industries. Now, but that's not all. I also opened 4 new positions, and that is ORCL. ORCL, after they had their earnings, they had a massive dip. Now, it could go further, but I started adding right here. Remember, ORCL Corporation is one of those stocks that I see a huge potential, especially for this year. Although the year's almost done, they're up for the year 70.21%, and ORCL is also yielding a dividend of 0.91%. So this is for me a stock. This is also a extremely old company, not extremely, but founded in the 1977s. As you can see, ORCL engages in providing of products and services that address aspects of corporate information technologies environments, including applications and infrastructure technologies. It operates throughout the following businesses segments: cloud and licensing, hardware and services. So yes, it is a cloud-based company. Also, if you take a look at their forecast, remember forecast, who knows, 14%, which is above the S&P average return of 8%. So for me, this is a buy at the current price. Do your own analysis. Let me hear in the comment section below. What do you think about ORCL? Next up, I added to Adobe. This is only a trade for me. Just take a look at this huge dump of Adobe's price. It could go even lower. It triggered its sell signal right after their earnings report. So we could see some more selling, but I also am awaiting a huge jump in the price to the year end, and that is where I'm going to take my farewells from Adobe. Next up is Hershey's. Oh wait, Uber. We bought Uber before Hershey's. We bought Uber. Uber is also extremely oversold. Now, Uber has the following problem. People are betting on the cybercab, the autonomous driving taxi. Will this come to fruition? Yes, maybe somewhere in the future, but not in the next 5 years. So then in the next 10 years, maybe. So what are we talking about? And don't forget, when those cyber taxis, when those cyber cabs are going to appear, they're mostly going to drive in dry areas without winter. I don't know how they're going to handle snow and ice. So for the current moment, Uber is overbought. Uber is a good company, and I'm definitely going to take advantage of this. Maybe I'm wrong. Who knows? So let's go to the very last one, which is Hershey's. Hershey's had a interesting year. So remember, this is a dividend king. Hershey's is growing its dividend constantly. This is one of the biggest reasons actually that I bought Hershey's. It had its massive downfall here. Here, this spike is actually where the announcement was that, let me just quickly search for the announcement. Yeah, there we go. That Mondelez would buy out Hershey's. They said that the price is too. So this is where the news was, that they're going to buy out Hershey's. They weren't happy with the price that they got, Hershey's that is, and the stock sold off once again, and that is where I bought some. So yeah, it also yields a pretty good dividend. here, look at 2.99% yearly dividend. So Hershey is also a great company, but it's just not they don't produce chips, so it's not up there with the companies of interest for the moment, not up there with the Magnificent Seven. But maybe this is the opportunity if you're a long-term investor to invest into Hershey's. So let's close up with a risk assessment for the markets for the next week. First of all, let's take a look at the economy for the next week. We're going to have retail sales on Tuesday. So on Monday, we don't have anything. I believe that the market is going to pretty much open as it closes if nothing happens over the weekend, some kind of war, or who knows, if Japan doesn't do anything. Then we have on Tuesday, we have retail sales. On Wednesday, we have building permits and the Federal interest rate decision. They are pretty much expected to cut 25 basis points. It's a pretty high percentage chance that they will cut, so I don't think they're going to surprise the markets, especially such a short time. And then we have on Thursday, we have GDP rate, growth rate, and then we have a Friday, the core PCE, or personal income is personal expenditure index. So a eventful week for the next week. So I would say let's take this into consideration. So open the markets here. Economic news are a high risk for me for the next week. Then we have ourselves here at the S&P. It's triggered a sell signal, but I don't think that's correct. Take a look here at the SPY. I think this is extremely over up there, but it's already triggered a sell signal on the 4th already. So markets are selling off. They're not oversold. They're on a sell signal. S&P on sell, which I think is going to go lower from here. Let's add this as high. Sometimes I also consult the free greed index from CNN, and it is currently at neutral. So market spirits are neutral. Let's leave this as a medium risk. Now these two combined, S&P on sell is basically the RSI pretty much up there. It could have further down potential. The MACD is in a sell signal. So I'm just going to leave this as S&P on a sell. Not going to take into consideration MACD on sell and RSI relatively overbought over the 50 with potential to come back. It seems that it's coming down. It's selling some more. So the risk is still on the downside. I believe I could tell the markets could get more oversold. So definitely, if you see a little bounce, raise some cash, and if you already have cash, maybe use this as an investment opportunity, because after the Fed cuts rates, which they will do, I see Monday, Tuesday high risk, Wednesday bouncing around, and then maybe on Wednesday evening the market is going to start taking off, and then I believe that as late as Friday the market is going to close on a positive side, and then we're going to go into Christmas holidays, and after that the market is going to rip into the next year, maybe, who knows. Let's keep an eye on it, and I'm going to be here, keep you up to date, so please like and subscribe. With this being said, I'm Norbert. Love you all, stay safe out there, catch you next time, bye bye.